So it's only been 2 weeks. And if I throw the 50-week moving average, notice this level has held as support. This is the line in the sand for Bitcoin for this bull market. Now, if I just go ahead and zoom out a little ways here, notice last cycle. Why is the 50-week so important? Well, because Bitcoin held the 50-week on the way up, and then when the 50-week broke and there were two weekly closes below the 50-week moving average, that meant the end of the cycle. And then the next time the 50-week was tested, it was resistance. Where are we now? We've seen the first and second and now third test of the 50-week. If I just bring it back on over to current. So here's the first test. Here's the second test. Here's the third one. Last cycle, the third test of the 50-week meant the cycle was just about over. But this time around, I can't stand it. But this time it's different. I don't know. But yeah, this time is different. So we'll see how that prediction works out. It looks like that correction may be over. I certainly hope that the correction is over. All right, so you can go ahead and scroll through this. Gold is, definitely overbought by just about any measure. So I would take a look at this gold slide here. The equity market has definitely found support, and I think that in any bounce that continues in equities, if I just bring it back on over here to the S&P, it looks like we're just going to print higher highs here. So yeah, looks like the S&P has found support. And here's the 20-week. So this is the 20-week. Let me zoom into a daily. So notice here the 50-day moving average held as support for the S&P. So it looks like we'll probably continue to push a little bit higher. That technical breakdown has been canceled. Okay, these systematic sell triggers, these are important to watch, but now that we're several percentage points above these levels, they're no longer imminently threatening. So we can move on. These US-China trade tensions, I think that this could be the catalyst that pushes us higher into year end. It's the same pattern that we saw in March and April. Tariffs, concern over trade disputes, and then the resolution of those trade tensions removed uncertainty, and markets rallied on the back of that. So I think that we'll see that same pattern play out again. And when uncertainty is removed, then markets will continue to move higher. And I think that we're probably seeing that start to get priced in right now. So um, let's take a look here at, oh, where are the last? There we go. So investor positioning, don't want to look at that right now. What I want to look at instead is the week ahead. Okay, so these catalysts, headline CPI and core CPI, that release is expected Friday. Now, if anyone wants to remind me, I don't think we got CPI because the government shut down last time it was supposed to be released. So maybe it is maybe that number prints this Friday, but we'll see. We'll see if that actually prints or not. So CPI is important because if CPI comes in hot, then you might start to see the probability of a cut this month. You might start to see that get priced out a little bit. And if you don't see that for October, then you might see if CPI comes in hot, you might see the December rate cut odds start to fall a little bit. So this will be important. Looking to see, so look, it's right now the expectation is that a headline CPI will come in. That's the expectation. So this is important to watch this Friday if that number prints this Friday. We're going to get, so SAP is, a large, isn't SAP like a European company? Maybe that's just a typo. So
That's
we're going
a
to start.
German company.
Right. SAP. So they're like the only like AI company in Europe, right? Something like that.
It's a big company.
Yeah. So this is what it's saying for some. So where are the rest of the items? I think it's the last slide. Is it the last slide here? The look ahead? I think maybe I revised it away because there are a couple of other items to take a look at this week. But yeah, no, it looks like the week ahead catalyst got revised away, and it's just the CPI release.